Okay, assalamu alaikum to everybody who's joined. Jazakallah khair for giving us your time this evening. My name is Abul Fazal Salahuddin. I'll introduce myself more formally shortly. But this evening's presentation is going to be around tax wrappers, ISAs and pensions, in particular, with the end of tax year coming up very soon. We thought it's a good opportunity for everybody to understand a little bit more about ISAs and pensions, what they are, what the rules around them, and also, we're here to help field any questions that you may have from a specific basis. So, without further ado, um, so before I kick off, I just want to cover off and make sure that everybody's aware that this evening's presentation, please do take it as factual information. It is for information purposes only. If you do feel like you need any kind of advice, please do go and speak to a professional for that advice. It's very, very important. So some housekeeping as well. What I want people to do is chat amongst yourselves, use the chat box for any chat amongst yourselves. But any questions that you want answered by myself or my colleague Fazil Siddiqui, who's here with me this evening, please do use the Q&A box for that. And we'll, inshallah, go through all of that this evening. So, so just to introduce myself, my name is Abul Fazal Salahuddin. I'm the head of private client services here at Wahed. Alhamdulillah, coming up to 6 years with Wahed now, so started very early, 2019. I've worked for a number of different financial services institutions. And more recently, before joining Wahed, I was a private banker with Climate Home Bros Private Bank. Worked at HSBC for the best part of 10 years, Halifax Bank and Scotland Group as a financial advisor. So I am a qualified financial advisor, investment advisor as well. And so, yeah, inshallah, we're just trying to use that knowledge and experience I've built up to be able to help guide our customer base as well. Alongside me this evening is my colleague Fazil Siddiqui. He's a senior relationship manager here at Wahed. And alhamdulillah, he actually beats me in terms of how long he's been here by about 10 days. But alhamdulillah, both of us, this is our 7th Ramadan, inshallah, in a couple of weeks' time that we've been at Wahed. So we want to talk about tax wrappers. So what is that? First of all, a tax wrapper is something that is government set up. So HMRC gives these kind of allowances for people to be able to save in a tax efficient way. And so essentially think of a tax wrapper like a container. So that container can hold whatever you want it to within certain limits and rules. But whatever is in that container, however much it then grows by, is completely tax-free, or usually tax-free or tax-efficient, more importantly, should I say, so it's great opportunity for people, especially where most of us are going to be working, paying taxes already. So any kind of incentives we get from the government, it's important that we're utilizing these. Now, one of the first and most common is an ISA, or an individual savings account. What I want you to understand is that ISAs have been around since early iterations from the late 90s. It's a way for you to be able to save up to £20,000 per tax year. That tax year runs from the 6th of April each year to the 5th of April of the following year. This current tax year, which is tax year 24-25, expires on the 5th of April. Now, on the 6th of April each year, your tax allowances resets. So very similar to your income tax allowances, that £12,570, that resets at the start of the new tax year. Same thing with your tax allowances, your pension and ISA allowances, they reset as well. So fundamentally, whatever you haven't used of that allowance is lost as a consequence. Now, an ISA or an individual savings account, the benefit of it is that there's no income or capital gains tax to be paid on any income or gains that you make from it. So it's really, really important that we understand this, because for a lot of us, we've taxed to the hilt on everything else, buying property, buying a car, even just going out and buying a new phone, there's VAT and all of these kind of stuff. So any allowances that the government gives, certainly like an ISA allowance, allows us to save up to £20,000 a year into an ISA, and no tax is then applicable. And the great thing about this is that it's quite flexible. So usually you're able to put money in and take money out without any penalty. Now, there are specific types of ISAs which you may need to pay penalties if you do withdraw. And I'll go through this in a minute as well. Another great thing with ISAs is that you can transfer them. You can transfer them between providers. So whether you've got ISAs with other institutions, you can actually just transfer those within the Wahed app over to your Wahed ISA account relatively quick and easy. The rules pertaining to ISA transfers is that within 30 days of initiating that transfer, the money needs to be transferred over to your new provider. So let's go through the different types of ISAs. So there's four main types for adults. There is a fifth, but that's for kids. It's called a junior ISA. For today's presentation, I'm just going to focus on the ones which are applicable to us as adults, and these are the four main ones. So cash ISAs, relatively easy. Most of us will probably be familiar with these, especially if you've gone into a branch of our bank in recent times. Cash ISA is essentially just a savings account where interest earned on that is tax-free. Generally speaking, because of the interest element, these are non-Sharia compliant, and so it's something that we as a community have probably shied away from. And if we haven't done, we certainly should be considering moving away from these. There are Sharia compliant banks out there who do provide cash ISAs as well. So you should be thinking about those kind of providers if you want to keep a proportion of your money in cash. Now, why cash? It's nice and safe and secure. Your £20,000 that you put in this year, it'll still be £20,000 next year, for argument's sake. The next one, and the one that Wahed offers, is the stocks and shares ISA. That allows you to put money into stocks, funds, fixed income, commodities, all publicly listed investments within that stocks and shares ISA. The other more common one that a lot of people have been taking up in recent times is lifetime ISA. This is where the government gives you a bonus of up to 25% or £1,000, whichever is lower, based on a contribution. But this lifetime ISA, there's certain requirements. First of all, you need to be under the age of 40 to open one. And also you're limited to only putting in a maximum of £4,000 per tax year. So that £4,000 eats into your £20,000 ISA allowance. Then the final one is the innovative finance ISA. Now, usually they were set up a few years ago for crowdfunding. So peer-to-peer lenders, they were using this. You lend money to another business or to other individuals. And in return, you'll get interest on your loan. That's tax-free from a returns perspective. Now, more recently, there have been some Sharia compliant providers out there who've started to introduce these and using Sharia compliance. So there are other options out there for you. So why is an ISA beneficial? Mainly because of the fact that the growth from this is completely tax-free. The fact that you are able to access the money whenever you want without having to worry about the tax element is something that which is really, really powerful. And in the previous slide, you saw a comment that if you are somebody who can afford to contribute on an annual basis and maximize your ISA allowance of £20,000, if you were to let that grow by at least 5%, as an average, and this is just assuming, it's an arbitrary figure here, but by your 25th year, you would have had over £1 million saved into your ISA. So let that sink in for a second. 25 years for a lot of us, that's probably a lifetime savings. Imagine having a pot of money where you don't need to then worry about how much you're pulling out whenever you want to pull it out without any worries about tax. That's really, really powerful. It may not be something which is important to you now, but certainly when you're looking to withdraw from it, it's going to be really, really important that you're able to pull something out without having to worry about the tax element. So let's move on to the next tax wrapper, and that's a pension. There's different types of pensions available. There's workplace pension, and there's also personal pensions as well. Most of us will know personal pensions by their acronym SIP, a self-invested personal pension. It is something that Wahed offers, but there are other institutions out there who do offer SIPs as well. A SIP, the key difference between a workplace pension and a SIP is a workplace pension, your employers set it up for you. It's otherwise known as an employer sponsor scheme, meaning your employer has chosen who to go with, and your employer has chosen what contribution levels to go into there. But under something called auto enrollment rules, it means that your employer is obligated if you're an employee, to pay into a pension scheme for yourself. You do have to pay in yourself as well. And the minimum legal allowance is, well, the minimum legal contribution level, should I say, is 8%. Whether that comes from yourself, whether it comes from your employer. If I'm honest with you, HMRC don't really care, as long as that 8% is met, and that's 8% of whatever your salary is. For a lot of people, they may have previous pension schemes just lying around, dotted around, especially if you've worked for different institutions, different employers in the past. You can roll them up so it's in one place, nice and easy for you to track. And this is where a personal pension could be quite important for you to do. Now, the benefits of a personal pension is that you have more control over where it's invested because you're choosing the provider. And more importantly, you're choosing the type of investments that it goes into. Most workplace pension schemes only restrict you to certain types of investments. Most workplace pension schemes do now offer a Sharia option, but we're limited from that Sharia perspective. It's usually just one fund which is available, and it's usually the HSBC Islamic Global Equity Index Fund. So here at Wahed, we do offer SIPs, and here at Wahed, we have a basket of investments ranging in terms of asset classes that we're using. As I mentioned to you before, stocks, funds, commodities, as well as fixed income, Sharia compliant fixed income products. So you can have a mix. That's important, certainly for those who are closer to retirement or considering retiring in the next few years. Reducing risk is very, very important. What I mean by reducing risk is reducing volatility within your investment. So the consequence here is that when you're young and you're starting off and you've got 20, 30 years ahead of you, go for something which is pure equity or higher in risk is going to benefit you in the long term. But when you're closer to retiring, you want to lock in those profits and reduce volatility. That's what we mean by reducing risk, reducing the fluctuations in the value of your investment. And this is where a SIP is going to be important for to you because of the fact that you can then manage that yourself. Another advantage of a SIP is that you can actually hold real estate within that. It is restricted to commercial real estate, but it is something which is quite important and powerful, certainly for those who are self-employed or have their own business, may have an office building themselves, own it. Your SIP your pension can actually own it. So it's a great way for you to then diversify your investments, not just in publicly listed investments, but now you're starting to introduce other asset classes that we know and love, like real estate. Now, one of the key benefits of a pension over an ISA is the tax relief. So tax relief, what I mean by that is contributions. So the amount that you're paying in, you actually get tax back, contributed back into your pension scheme based on what you're contributing. And that can be up to 25% of whatever you're putting in. Okay. So essentially it's the basic rate relief that you're reclaiming back. And if you're a higher rate taxpayer, there's an additional amount that you can claim back on your tax return. So I'll go through that in a little bit more detail. With a SIP, you have that flexibility of investments I mentioned before. And again, you can transfer these pensions between different providers. But unlike an ISA, where there are certain rules around how quickly one provider needs to transfer the money to a different provider. Unfortunately, with pensions, it doesn't work like that. So typically, pension transfers can range between 6 to 12 weeks, if I'm honest with you. So it can be quite a lengthy process. So let's have a look at a bit of a deeper dive in terms of tax relief and how that works. Okay, so first of all, if you're paying into a pension scheme and you're fortunate to be employed and you've got an employer paying into your pension scheme as well, those are added together. You get tax relief on what you've contributed. Those investments grow. Your pension pot, when you're close to retirement or at retirement, you then have a few options available to you. So the first option is withdrawing a tax-free lump sum. It's also known as a pension commencement lump sum. That's the actual technical term for it. But it's essentially up to 25% of whatever your pension pot value is, you can withdraw as a tax-free lump sum. The rest of it, you have a few different options. One of them is a bit of an archaic option. It's buying a guaranteed income for life. That's usually done through something called an annuity, which is essentially an insurance product where you're buying an insurance contract, which then pays you a fixed rate of income for the rest of your life. Now, because it's an insurance product and there's usually interest elements embedded within that contract, it's not Sharia compliant, unfortunately. But in recent years, there's been new additions made to pension rules in terms of drawing down. And there's something now called a drawdown or flexible access drawdown, which means that you can actually take lump sums as and when you need to from your pension pot. So you can then leave the rest invested and only draw what you need for that year or for the next couple of years or for the next 6 months. It's entirely up to you. That's the flexibility that the pension offers you under flexible access drawdown. Or you can take the whole lot as a lump sum if you want to, as cash. Now, I wouldn't suggest doing this for a lot of us. And the main reason for that is whatever you're drawing, especially after you're taking your tax-free lump sum, is going to be treated as earned income. And so therefore income tax is going to be applicable. So for a lot of us, doing that flexible access drawdown is a way of managing the tax implications of when you're withdrawing from it. Now, you're probably thinking, well, hold on a minute. What's the point of doing the pension in the first place if I'm having to pay tax when I'm drawing from it? Now, the main reason why you would want to consider doing something like this, and I suppose is probably more relevant for those who are higher rate taxpayers, is because on the way in, you're actually getting more tax relief than in theory when you're drawing out from it. In theory, when you're drawing out from a pension scheme, because you get to manage how much you're drawing out, you could limit yourself to being just a basic rate taxpayer. And if you think about it, for a lot of us today, that basic rate threshold of £50,000, it may not cover everything. If you've got home ownership costs, you've got kids, school fees, all of that kind of stuff could be quite expensive. The theory is when you're at retirement, you don't have those additional costs anymore. For a lot of people, when they come to retirement, those kind of costs have diminished or moved away completely. And so therefore, for a lot of people, up to £50,000 as an income at retirement is actually a pretty comfortable level. So let's look at the tax relief, especially for those who are basic and high rate taxpayers. So essentially, if you're paying in, and I'm just using this as an example here, if you pay in £8,000, what the pension administrator, in this case us, would be able to claim back from the taxman is the basic rate relief. Okay, so essentially, by you putting in £8,000, we would claim back from the taxman £2,000. So for your £8,000 investment, you've actually got a £10,000 investment. So that's a 25% uplift without the money even hitting one of the investments yet. So that's a great thing, and you should definitely be thinking about doing this if you can afford to do so. £8,000 for £8,000, you get a 10 grand investment. That's pretty good, right? Now, if you're a higher rate taxpayer, it becomes even better. Why? Because as a higher rate taxpayer, there's an additional 20% to be claimed back on your tax return. So on your tax return, you'd actually get another £2,000. And essentially what that means is you're not getting that added to your pension scheme because you've already got that within the basic rate, but you reduce your income tax bill by a further £2,000. So the net cost to you as a higher rate taxpayer is £6,000. You've still got a 10 grand investment, but the net cost to you has only been £6,000. So that's absolutely brilliant if you think about it. So for a lot of people, these kind of, I've gone through an ISA, I've gone through pensions and how they work and things like that. For a lot of people, they're still thinking, well, actually, which one do I choose? And the number of times, Fazil and I, we've spoken to clients and they're saying, I'll use my ISA for retirement or, my pension for retirement and that's my only savings. For a lot of people, they're still deciding, well, which one is right for me. So let's deep dive into this in a little bit more detail now. Let's have a look at some similarities and key differences. So the key thing with an ISA is when you're making contributions, it's after tax. There's no income tax relief that you get from paying into an ISA. So you're a little bit limited from that perspective. With a pension, obviously, you get the tax relief that I've gone through already. So that's really, really important. You're getting an uplift just by purely putting in money. Now, when you're withdrawing from an ISA, there's no further tax to be paid. Yeah, remember, you've not got any tax relief on the way in. And so therefore, whatever it grows by, you can withdraw all of it tax-free. But because of the tax relief within a pension, you're limited to how much you can actually withdraw from it, up to 25% tax-free, but then the rest of it will be treated as income. Another key difference with ISAs is you can access it anytime. So it can be used as your short, medium, and long-term plans. Okay. Whereas a pension, you can't access it until the age of 55. And from April 2028, that actually is going up to 57. So you should be thinking about a pension as your long-term pot. So ISA is a more short, medium term. You can also consider it as your long term, but the pension in particular is a long-term investment vehicle. Obviously, both grow tax-free. So whilst the money is within both of these tax wrappers, it will grow income and capital gains tax-free. So that's really, really important. Now, I've already talked about allowances for your ISA, £20,000 a year, but I haven't mentioned that for pensions yet. So with pensions, is actually £60,000 is your annual allowance, or 100% of your earned income. So unfortunately, for those of you who have rental properties and things like that, your rental income isn't treated as earned income, so that wouldn't qualify. So it would only be your earned income that would qualify. So it's £60,000 or 100% of your earnings, whichever is lower. So for example, if you earn £30,000 a year, then your limit is £30,000 a year that you can pay into a pension scheme. If your income is £100,000 a year, then your limit is £60,000 a year. So hopefully that puts it into perspective. Both of these, you need to make sure that you've got a will. And as Muslims, we should always, consider not sleeping for 2 nights without having a valid will. But both of these can be passed on to loved ones. But unfortunately, from 2027, pensions are going to be included as part of our inheritance tax allowance. So it will be considered as part of our estate up until that, April 2027. Pensions are actually outside of our estate for inheritance tax purposes. So hopefully that's to give you all a bit of a whistle-stop tour in terms of pensions and things like that. But hopefully what I've been able to do is provide you with similarities, but also the key differences. So if you are still deciding which to go for, if you can afford to do so, the answer should be you want to consider both. So with that, I'm now going to open it up to yourselves to take some questions. So as I said to you, please do use the Q&A box for any questions, or if there's any chats, or raise your hand and I'll unmute you. You can ask your questions. So over to you. Please don't be shy. Please raise your hand or ask questions in Q&A or even in the chat box. Hopefully I've gone through enough. I know I haven't gone through absolutely everything, and so therefore nobody's got any questions left. But yeah, please do ask your questions. Okay, so we've got one question. As a limited company director, I want to contribute towards the SIP for my limited company to make use of the tax allowance of £60,000. Can I invest directly from my business bank account into a SIP with Wahed? So great question. Unfortunately, at the moment, that's not possible. Our SIP product at the moment can only take personal contributions. We are working with our SIP administrator to make that employer contribution available. We are, looking at that, and we're hoping that within the next few months, actually, believe it or not, we'll have that employer contribution facility available. But right now, unfortunately, it's not available. So please do, get in touch with us, and we will let you know as and when that feature does become available. Okay, so next question. Can you go through the SIP 6K to 10K example again? Okay, cool. So let me just go back to what I was showing. So just to show you here, so fundamentally, you put in £8,000 out of your personal savings into a pension scheme. That £8,000 will then attract tax relief of £2,000 into your pension scheme. So that £2,000 is added to your £8,000 and you get a 10 grand investment as a consequence. So first of all, it's only cost you 8 grand. You got a 10 grand investment. Now, if you're a higher rate taxpayer, on your tax return, you get to claim back the additional 20%, because remember, you're a 40% taxpayer, not 20%. And that additional £2,000 or 20% is then claimed back on your tax return. So the net cost to you is £6,000, because your income tax bill is being reduced by £2,000. So the net cost is essentially 6 grand because of the tax relief. Hopefully that has made a little bit more sense. Okay, so next question. Can we get to choose where investments are done with the stocks and shares ISA? Yes, most definitely. You get to choose. Now, depending on the provider that you're using, here at Wahed, we obviously offer a managed portfolio, meaning that we have decided on the investments based on the level of risk you want to take. We use different types of asset classes, and the level of risk you're taking will then determine what proportions to hold in different asset classes. You can go to a stockbroker or any other kind of provider out there, and you get to then choose the type of investments because you're then managing it more yourself. It's DIY. You're getting to choose what kind of things to invest into. Obviously, you need to factor in Sharia compliance in that, but yeah, you get to choose that. Okay, next question. Assalamu alaikum. Will you be able to get access to this recorded video as you missed the beginning because of praying? Yes, we will, inshallah, be sending out the recording to everybody who's registered for the webinar. Okay, another one. What alternatives are there in a private SIP other than the HSBC fund you mentioned that most workplace pensions? So look, there are numerous different types of pension funds available, funds generally speaking. SubhanAllah, when I first joined Wahed, there was probably about 4 or 5 different Sharia compliant funds out there, publicly used, quite widespread. Today, alhamdulillah, it's probably into more than 10 to 15 now. Here at Wahed, our portfolios, the number of funds that you'll have available to you will probably be, depending on the level of risk, up to about 9 different funds that you'll have exposure to. Some of them are HSBC funds. There's iShares funds in there as well, Franklin Templeton. And there's a Han ETF physical gold fund, which is backed by the Royal Mint as well. So there's numerous different Sharia compliant funds that you can invest into within a SIP. And also, not forgetting, you can also choose the Wahed fund. A lot of stockbrokers and the Wahed portfolio will have the Wahed fund available to you within your Wahed SIP as well. And you can also use that with other SIP providers as well. Another question. I have an employer pension. Can I have a SIP as well? Yes. So with ISAs, with pensions, you can have as many different types of pension pots as you want. Now, remember, the key thing here is your annual allowance. So that's £60,000 in particular for pensions, as that's your question. As long as that is not breached, or whatever your earned income level is within pensions, you can have as many as you want. But again, the chances are having 10 or 12 different pension pots, it's probably going to be quite difficult to manage. There may be 1 or 2 alongside your employer one is more than sufficient. But again, for a lot of people, your employer one, as well as having just one SIP, is nice and easy. It's a good way for you to track that as well. Okay, somebody else. Someone I know says stocks and shares ISAs may not be halal because the companies they invest into might not have totally noble goals. What should I tell them? Okay, so fundamentally, what you've got to remember is that from a Sharia perspective today, there are a number of different things that scholars opine over when it comes to Sharia compliance. So the first is most of these companies, they need to not operate in particular industries, arms manufacturers, for example, as one which is probably in a lot of people's minds recently. Alcohol producers, banks, insurance companies. So that's one area. And obviously being Sharia compliant, these kind of companies which operate in these certain industries is already stripped out. What the scholars then say is whatever is available in the thousands of companies which are still available from all the different other industries still available to us, then they apply financial criteria and making sure that companies operate within certain thresholds. So the scholars again have opined that actually there's certain parameters that as long as these are not breached, it's Sharia compliant. So that's the starting place. And this is where we are today with regards to investments from a Sharia perspective. But the goal is to work towards something which is a lot more ethical, a lot more tayyib in terms of, wholly good for us as well. And that's where institutions like Wahed, we've written public letters to the scholars to review those kind of rules. And a lot of these rules were set up in the 90s, for example. So it does mean that these rules should be reviewed, and we've asked our scholars to do that. But what we've also not done is just wait for the scholars to opine on this. We are taking steps to have a look at these kind of things within our own funds that we manage and invest. So it is something that we're working towards. And look, the industry is still at early stages, but it is something that myself and I know of other providers out there that we are looking at it. So it's most definitely something which is fundamentally, focused on our mind, certainly over the last 15, 16 months in particular. But even beyond that, with other plights of Muslims throughout the world, it is something that has been weighing heavily on our minds, and it is something that we are working towards. So fundamentally, what we've got to remember is that the scholars have opined on this. There are Sharia compliant solutions out there. That's a starting place, right? We're working towards something which is better for us as a community, and which has less of an impact on our community as well. So participating and doing and putting your money into something which is Sharia compliant right now is better than not. But it also then encourages providers like Wahed and other Sharia compliant solution providers out there to then take that next step. And so it is something that we, inshallah, will be working together with to move towards that goal. So somebody else has got a sideline question. How is it not possible to invest into property deals from our general portfolio? So I'm not sure if I get this, if you're referring to just the Wahed property deals. At the moment, the Wahed property deals, they're not ISA eligible. So remember, with any kind of investments, they need to be eligible to be held within that container that I mentioned right at the beginning. So that container, there's rules in terms of the type of funds and type of investments which can go into that container. So the kind of private property deals that we have right now, they don't meet those kind of criteria, and so therefore they're not eligible. But there are other providers out there who have started to offer property-backed deals, and they use the innovative finance ISA wrapper for that. But our general stocks and shares ISA allowance is something which we use here at Wahed. And what you've got to remember with these kind of stocks and shares, they need to be publicly listed first and foremost to give people that peace of mind and transparency, but also the liquidity. Private investments, they don't have that same level of liquidity, so it isn't something that we can use within our stocks and shares ISA. Next question. Thank you, Wahed. My application has been pending for approval for several months. I suppose if you can private message us with regards to documents and things like that, either myself or Fazil will be able to pick this up if you can give us your email address, and we'll look into your application in a little bit more detail. Next question. I want my daughter savings, who's 18, into an ISA. How do I go about this? Okay, so first of all, because your daughter is 18 years old, your daughter can open a stocks and shares ISA with Wahed or different providers out there in their own name. So any savings that you have can go into that. Now, also bear in mind that obviously 18, whilst technically an adult, we may not be comfortable putting all of their savings into something which is then managed by an 18-year-old. So you can still use your own ISA, and with the Wahed app, you can create a separate ISA pot, give it the name of your daughter, and put the money that you've set aside, if it's in your name and it's in your account, into that ISA, which is then labeled with your daughter's name. So that's another great way of doing that. But if if your daughter's mature enough and able to manage money without it frittering away, unlike I was when I was 18 years old, your daughter can set up the ISA in her own name. So another question here, is it possible to move the pension schemes abroad if one decides to go back home in continental Europe? So great question. So first and foremost, your ISA, your pension is a UK scheme, okay? So it's a UK registered scheme. So it will need to stay here in order for it to retain the tax efficiencies and things like that. A lot of people do move abroad in the future, and there's nothing stopping you from withdrawing from a pension, which is still held here, and just drawing that income to whatever account you are, you want in the future. If it's abroad, it doesn't matter. But if you do want to move that investment because you've got no other ties to the UK, then you need to speak to whatever your country you're from. If they have a registered pension scheme or something like that, retirement scheme available, you need to speak to those providers to see whether they would accept the transfer of the scheme from the UK over to your home country. Another question here, Salam, what is available in terms of ISAs from yourselves at Wahed? So I've mentioned it a couple of times here, but here at Wahed, we only offer the stocks and shares ISA as an opportunity. That's the only thing Wahed deals with at the moment is in terms of investments. Within the ISA, it is publicly listed investments, and so that's what we do offer. Second part to your question, I am interested in junior ISAs for my children. Any important information related to junior ISAs will be highly appreciated. Okay, so with junior ISAs, Jazakallah khair, first of all, for that question, I did mention it briefly at the beginning, but you've reminded me. So junior ISAs, they've replaced it for those of us who are old enough and got children who used to have the child trust funds. So the junior ISA replaced that. Junior ISA has its own allowance of £9,000 a year. So that's an additional allowance in addition to your £20,000 allowance, but that has to be held in the child's name. So it's a junior ISA, you manage it as the parent or the guardian on behalf of the child, but it is their account. So as soon as that child becomes 18, that money becomes theirs. So they are then thereafter in control of it. So like I mentioned earlier, if I was 18 years old and I got given a lump sum, it would probably be gone by the time I was 19 years old. But inshallah, we teach our kids better than we were taught. Yeah, so those junior ISAs, it does become the child's as soon as they're 18. Technically, it's already theirs. We're just managing it on their behalf. And just one other point while I'm talking about this, there are junior ISA providers out there. Wahed, unfortunately, doesn't offer a junior ISA at the moment, but there are providers like Hargreaves Lansdown, for example, who do offer junior ISAs, which do offer Sharia compliant funds, which you can choose to invest into. You're doing it yourself with them. So you're picking and choosing the type of investments. But with a junior ISA, they don't charge you any fees. There's no trading fees. There's no custody fees or anything like that. So it's a great solution for those of us who are thinking about savings for kids. The Hargreaves Lansdown Junior ISA is a great solution for that. Okay, next question. Can you invest into property via your SIP? Yes, that is possible, but it can only be commercial real estate. So is it an asset class that the Wahed SIP offers? Unfortunately not. At the moment, our SIP solution is restricted to just investments in publicly listed investments, similar to the stocks and shares ISA. But we do plan to sometime in the future, as the product matures and things like that, we will possibly look at making these kind of solutions available to you. It's a little bit more complex, more mature SIP administrators out there. For example, we do use options pensions alongside our own Wahed SIP to offer a Sharia compliant solution using the Wahed investment portfolios. And options pension SIP, they do have commercial real estate feature available to them. Obviously, it's a little bit more expensive because there's a lot more administration which needs to be undertaken to hold commercial real estate. But yeah, it is something that we can look at today if that is something you want to look at. Next question, how do I roll workplace pensions into the Wahed pension? So it's actually really simple. So you open your Wahed SIP, and within your Wahed SIP, you do have a transfer button. Click on the transfer button, and there's numerous different providers. So your old workplace pension providers, chances are they're listed on there. Input your details, put down the name of who the provider is, the value, the policy details, click submit, and we take care of the rest. It's as simple as that. So it's a great way that you can roll these over to your Wahed SIP. Okay, now another question. As a high rate taxpayer, what about if you haven't paid £2,000 tax as a higher rate, for example? If you have income of £52,000. So look, it's proportional. Obviously, £2,000 is what you would be in the higher rate threshold. What would essentially happen is that your allowances, and the technical way this works is that additional £2,000, as I mentioned to you before, what will essentially happen is that your thresholds are actually increased. So that, I've mentioned before, your £12,570 is your nil rate band in terms of earning that amount before taxes applied on the rest. That would actually just get increased to 14,570. And your threshold of £52,000, and that £2,000 being in the higher rate threshold, well, actually, your higher rate threshold will then just move to £52,000. So then, therefore, you're treated as a base rate taxpayer. And so it then moves on for the upper limits as well. So that's how the additional rates of tax are relieved. Next question. What is the most efficient way to invest your money short, long term for someone who's working full time? What steps do I need to take? So I mentioned before, utilizing both your ISAs as well as your SIPs, it gives you the flexibility of having short, medium, and long-term access to money. Your ISAs for your short, medium term, your pensions for the longer term as well. So if you can do both, and if you can afford to put money into both, knowing that pensions, you can't access that money, certainly until the age of 55 right now, but from 2028, it's 57. And if you're comfortable leaving that money there, not accessible until that stage, then you've got your short, medium, and long-term pots made available both through an ISA as well as a pension. Another question here. Can the inheritance tax changes from pensions from 2027 be planned around? There are certain things you can do. With pensions, not so much, because it's already a specific type of trust. A pension is actually a trust account. So there's not much you can do around that right now. But there is white papers being done around these recent pension rule changes. So these kind of rules, they can change in the near term. So whilst right now they've said right from 2027 it's going to be included as part of your estate, they may then attach some addendums to those rules to then allow for inheritance tax planning, utilizing those pensions. So it's not unfeasible that those rules and inheritance tax planning can be factored in as part of that sometime in the near future. Okay, so how do I move savings into an ISA? Quite easy, really. Move the money if you're using the Wahed ISA. Just move it to your bank account and then just transfer it through the Wahed app into your Structured Seeds ISA. It's as simple as that. It's all done through open banking system using Plaid, and it's just a bank transfer from your bank into your Wahed account. It is as simple as that. Should take no more than about 30 seconds to do. Great question here. So this person, we've got some phenomenal questions here in terms of, the next question is, if you have an NHS pension, why go for a SIP? Can it be accessed earlier? So depending on the type of NHS pension scheme, I mean, there's numerous different ones which are available, 1995, 2009, 2015 schemes. Each of them have slight differences in terms of how much they accrue by, what your benefits are, all of that kind of stuff. So the long and short of it is, if you've got an NHS pension scheme, yeah, you can still have a SIP alongside it, as long as your annual contributions between your NHS pension scheme plus whatever the amount is being rebased, which is treated as your employer contribution, as well as your personal contributions going into a SIP, do not exceed that £60,000 limit or whatever your earned income limit is each year. As long as they're not breached, you can have as many different pension pots as you want. Some really, really good questions. Hopefully I can get through all of these in the next few minutes. So next question is, what's the main difference between a Wahed and other Sharia compliant companies? It's a really good question. So the main thing here at Wahed is that, look, we manage investments on behalf of our clients. A lot of other providers who offer Sharia compliant investments, these are DIY. So most of these other kind of providers out there, whilst they offer you Sharia compliant solutions, you're having to pick and choose what you want to go into. Here at Wahed, we're managing all of that for you. So we're doing the heavy lifting. So the key difference here is that we're doing all the heavy lifting in terms of deciding what kind of investments are suitable, which ones are going to be worthwhile us investing into for our clients on our clients' behalf. But also because we're an institution and we manage over $1 billion worldwide, we get access to a lot of these Sharia compliant investments at what's known as institutional rates. So we get these because of our size and the amount that we're managing globally. We get these same Sharia compliant investment funds at cheaper rates. So main difference is we're managing it for you, but also the solutions that you're getting from us are usually cheaper than what you would be able to get access to yourself. Next question. If I have an ISA pot in my daughter's name as well as my own, can we put £20,000 each? Yes. So each person has this £20,000 allowance. And if your daughter has their own ISA, yeah, you can have £20,000 each. If you're married, you've got a spouse, use your spouse's allowance as well. So each person will have their own individual £20,000 allowance. Next question, does Wahed offer a lifetime ISA? Unfortunately not. The only solution we have at the moment is that stocks and shares ISA. So Jazakallah khair for the person who's provided their email address. We'll hopefully get in contact with you very, very soon. Next question, will the NHS pension be subject to inheritance tax? So the NHS pensions don't work in the same way that traditional pensions work. Main reason being is that NHS pension scheme is what's known as a defined benefit scheme. So what that defined benefit means is that it's a promise to pay you an income at certain rates sometime in the future once you retire. So there's no real monetary amount that you will be invested, and so therefore it's not treated in the same way from an inheritance tax perspective. Personal pensions or money purchase schemes, conventional employer-based investments, they do have a monetary amount. Each individual person has their own investment pot, so that will be treated from an inheritance tax perspective. So NHS or those who are a bit older and have defined benefit schemes, they're not treated in the same way from an inheritance tax perspective. But again, I just want to remind everybody here that look, we're not financial advisors here. If you do have specific questions related to your NHS scheme, speak to your NHS HR representative or speak to a financial advisor if you feel that you need that kind of advice, especially if you're on the cusp of looking to retire in the next year or so. That's going to be quite important. Or reach out to us and hopefully we can give you some specific guidance, but generally speaking, defined benefit schemes won't be treated in the same way. Last question, do we get to know the specific stocks and shares which are managed by managed by Wahed? Yes. So once you've opened an account, when you're looking at your portfolio, you can click on allocations. If you scroll down within your investment pot, you'll have an allocations tab. It will then have broad asset allocation bars there, but then there's a drop down and it will then show you the specific investments or the funds that we're using for those asset classes and the proportions of your investment pot, which are then allocated to those individual funds as well. If you do want further details and you don't have an account with us yet, please do email us. The email address is privateclientuk@wahed.com. And we can provide you with access to that. Or if you go to our FAQ page on our website and you look at the investment section, there is a section which details the different funds that we use on our website as well. So I think that's all the questions that we've had so far. And we've done really well. There's a few minutes left until 8 o'clock, but listen, Jazakallah khair to everybody who's joined, all the brilliant questions that you've asked. There's been, subhanAllah, over 30 of them. Hopefully you found this session beneficial. But if you do want to reach out to us, you will get an email with our email addresses on there. Please do reach out to us and inshallah we can help you further as well. Jazakallah khair. Thank you so much to everybody who's participated. Your questions have really, really added to our presentation. But hopefully what I've been able to share with you in terms of tax wrappers has been really beneficial. And certainly before the end of the tax year, guys, if you can afford to do so, try to maximize those allowances wherever possible as well. Again, Jazakallah khair. Thank you so much to everybody, and Jazakallah khair to Fazil, who's been fielding questions while I've been answering them live as well. But again, yeah, thank you. Jazakallah khair. Assalamu alaikum.